Good morning, guys. So this is how I normally do my top-down analysis before I trade. Every week, this is how I check how I trade zone to trade possible area where I will put my point of interest. So now, I normally start from the monthly time frame because the monthly time frame is one of my overall time frame, and you know the higher the time frame, the higher the strong that level is. Okay, so if you start from a higher time frame to do your top down analysis, that is where you will see the large picture of the market. So let's start from monthly now. So if you check monthly now, from this area now, from this area, from this area, price broke structure down, broke this structure down. It moved up. That is this higher low. It broke it down. Then it created this high around this area. Then it created this low, but it could not break this low. So it now break this high. So we are on a bullish trend now. As we will be looking for opportunity to buy. So but before then, let's go. Monthly broke structure up. So price need to retrace back to the monthly order block area. So price need to retrace back to the monthly. So let's use this our Fibonacci. So this is our Fibonacci. So this is the area where I will mark as the 50% level. Because price need to retrace back to the 50% level or below it. But let's just use 50% level. Price can come around this area, start moving up, or it can go if there is any other liquidity below, it can still go and take them. But let's use this one. Price need to come to this area before we can enter. But price can still move anyhow. But this is our top down analysis. So now this is the area where I mark now. So let me remove this Fibonacci so that the chart won't be so messy. So now the monthly is on bullish. So our overall buy now from our top higher time frame is bullish. But we don't need to wait for price to come to this area because it might take up to months, 2 months, 3 months before price can pull back to this area. That delay you get? I've forgotten where I stopped. So sorry, someone distract me. So now the price don't need to come down direct like this. It need to break structure because that's the footprint of the market. Higher low. If you know something like that, that's higher low. So after our top down analysis from monthly, we will now go to weekly. Sorry. So weekly objective now is to retrace back to this monthly order block area, which is this area we mark this yellow line. So, but price don't normally move on a straight way. It normally follow higher low, which is the normal move. So if you check around this area now, price move around this area, it stop around this place. So, which from this area you can still be entering or trading from this area. So where price normally make this higher low. So but price now reach this area now. So weekly now need to retrace back to this area. So if you check now, weekly reach this area, it broke this structure. So it broke this structure. It it did not come direct to this area. It need to fill the other block from this weekly structure. That is how price normally moves. So this is the other block. It broke the structure. Sorry, let me use this one. It broke the structure, so it moved back. It fill it, came down again to this low, broke this structure now. So now it's going back to feed the other block around this area now to feed the space left around this area. Then before coming down again, then maybe when it come down, it can still break structure, fill it again, then come down, break structure, fill it again, then come to this area. Now we will not be looking for a change of character, but we are not. So now after the from here now, the weekly is trying to go down to the monthly or other block, but it need to one any structure it break, it need to fill it. So we'll now go to the daily now. So the daily time frame now, remember each time frame, the higher the time frame, the let me just put it, monthly control weekly, so weekly control daily, so daily control 4 hour, 4 hour is stronger than 1 hour, then 1 hour stronger than 15 minutes. But those time frame have their normal behavior. So we can say our top down analysis is monthly, weekly, then we use daily and 4 hour for our you know, point of interest area, then 1 hour and 15 minutes for our confirmation plus entry. So now we are on the weekly time frame now. So sorry, we're on a daily time frame. I forgot to mark something on weekly. So this weekly now, this is the remember the last opposite candle. That is where you will find your point of interest. So this is where the other block will be staying around this last green candle now. This candle before this one. Cause price came here, broke it. So we will not be looking for the other block around this area. So our next move now is to go to the daily. So the daily will now need to obey the weekly. So the daily now is now moving towards the weekly supply area. So as you can see, this area now. So from this area now, because if as you can see now, price came to this area higher, low, high again, then it broke structure. Then now the other block lies around this area. So now price has came towards this area now from the weekly. But from this area, from somewhere around here, where we have been trading on, we have been trading based on price structure. We are trading to this high. So, but this point of interest is from the weekly. So we will be expecting that because we were expecting price to pull back to this area before continuing down. So price has been coming up. We have been following it, but from this area now, we expect that price will go down now from this area because this was this thing target. But anything can still happen. Price can still break above and accept above. Then we'll now look for another liquidity above that is targeting. So for now, the weekly now has gotten to this area. So after we check the weekly now has gotten to this area, and as you can see, it's like I'm seeing something like the weekly is trying to break structure down from this area. If we zoom it very close now, or let me just we zoom it very close now, you'll notice that the weekly is trying to break structure from this area down. So now this the 4 hour. This is where we map out our point of interest based on structure. So since price has gotten to the weekly target, the daily has pushed price to the weekly target. So this is where I map out my supply zone or demand zone. So this is the area now. The area on I show you guys on daily. So this area. So if you notice, price came towards this area, created this low, move around this area, come around this place, created this a little liquidity, then move down now. So if I show you guys something around here now, let's zoom it. So price come around this area, which is that it sweep the high, came down, it could not break this. So it sweep again, come down around here. So it range around here a little, then break it down. Price came back here to take liquidity. Yeah, it has taken liquidity from here. So this is why I told you guys 4 hour is where I map out my point of interest. So as you can see, this trade now, I was on this trade, but I got stop out from this trade. So my stop loss was so tight. So this I told you guys the last opposite candle, that is where we mark. That is where the other block lies. So as we mark it now, this is a supply zone. So inside that supply zone, we need the last opposite candle as our point of interest where price will come and sweep before going down, because price normally take a liquidity sweep. So that sweep I'm mentioning now is liquidity. It will sweep liquidity before going its direction. So price come towards that area. Let's go to the 1 hour now. So this is the area I mark. This area I mark. So this is the last opposite candle now. This is where I normally map out my other block from. So price come around this area. Let's use this line. So this is the line price come. So as you can see now, price came towards this area now. See, look at the area. So this is the liquidity sweep I'm talking about. The liquidity sweep is only this week. You will see this lean week now. This week now move high towards this area. now rejected back. So that price sweep this area, came back. It did not close above. So after sweeping the area, before we enter, we normally use 15 minutes as our entry. So, but you can still use 1 hour, but 15 minutes is more faster and okay. So you understand. So price came around this area. So this is the area. So I don't know. Let me just mark it so that if I go to 15 minutes, you can identify it. Let me mark it with a blue green color too. So this area now where I mark. So this is where price sweep. I normally wait for price to sweep from 1 hour. So once price sweep my point, because this area now, this blue line I mark is my point of interest. Now I'm waiting for price to sweep. So once price sweep my point of interest, I will normally go to the daily. I will normally go to 15 minutes now and look for a break of structure. So this is the area now. Price sweep. Price sweep this area. Look at where price sweep. Price sweep this area. So this is the structure. This is the low it created before it went to sweep. After sweeping, it could not break this low very well. So it moved again. Now it came around this area now. So it broke all this structure now. Okay, so now price has broken structure. But I will now wait for price to pull back. So price pull back towards this area now. From this area, price move, sweep this place, came back. It could not break this structure. I didn't mean it broke the structure. I'll be looking for a pullback. Maybe I might enter from here, but still it came again. It could not break this high. So that means they are now fighting, buyers and this thing seller. So now they fought a little. Then sellers now won the battle by breaking this low. So breaking them, but we did not enter from this break. After the break, we will still wait for a pullback. So after the break, price came to this area. Now still pull back again. So this is where we enter. So this is the pullback it give us to this area. From this area now, this place now, this is where liquidity is resting. The price came back to this area. So this is where I entered from, but I got stop out that yesterday. So this is where if you want to enter, you enter. Then your stop loss need to be, once you enter, your stop loss need to be below this area. So your stop loss need to be below this area. This area. So this the higher it's created before breaking structure. So your stop loss need to be below this area, but just give it small room, just like as I give this one now. Let it don't be too tight. Just small room. So as you can see now, as you can see, price came towards that area. Now it came towards that area. Now move. So this was how price move. So as you can see, price move, and the price gave from that area now. Price gave 1:7. So that is how I normally do my top down analysis. But as time goes on, we'll still explain because I know you guys won't understand everything I explain here. Some won't even understand anything, sha. But with time goes on, I'm going to explain it better. So thank you guys. Don't forget to like, subscribe too.